BingX, a trusted global crypto exchange. Trade spot, futures, or copy top traders easily. Sign up via the link or referral code to get 30 USDT instantly, plus up to 1,500 USDT in bonuses for verification, deposit, and trading.
Global stock markets are experiencing a significant downturn, with investors pulling back amid growing apprehension that the artificial intelligence boom might be entering a cooling phase. The euphoria surrounding AI valuations, which had propelled many technology stocks to record highs, is now giving way to concerns of a potential market correction. This shift in sentiment has sent ripples across major financial centers in the US, Asia, and Europe, following stark warnings from banking leaders about the possibility of a substantial stock market correction on the horizon. In the United States, the tech-heavy Nasdaq Composite and the broader S&P 500 index both registered their most significant one-day percentage declines in nearly a month on Tuesday. The Nasdaq's descent was largely driven by a slump in technology shares, ultimately closing down by 2%. The downturn also affected all of the so-called Magnificent Seven stocks, a group of AI-centric giants that have been leading the market rally. This included prominent names such as chipmaker Nvidia, e-commerce and cloud computing behemoth Amazon, consumer electronics titan Apple, software giant Microsoft, electric vehicle and energy company Tesla, search engine and advertising kingpin Alphabet, and social media conglomerate Meta, which owns Facebook, Instagram, and WhatsApp. The S&P 500 also saw a notable dip, closing down just over 1%. The tech sector's weakness weighed heavily on the index, with particular scrutiny falling on data analytics firm Palantir. Despite raising its revenue outlook the previous day, Palantir's stock plummeted by nearly 8%. The company has also become a focal point for short sellers, investors who profit from a decline in a company's stock value. Michael Burry, the investor renowned for predicting the 2008 financial crisis and the subject of the film, The Big Short, has initiated bets against both Palantir and Nvidia, two of the most influential AI companies. This move has ignited sharp criticism from Palantir's chief executive and contributed to a broader sell-off in their shares. In a candid interview, Palantir CEO Alex Karp vociferously defended the AI sector, accusing Burry and other short sellers of attempting to call the AI revolution into question. Asian markets mirrored the declines seen in the US, experiencing their sharpest slide in 7 months on Wednesday as concerns over tech stock valuations permeated the region. Indices in Japan and South Korea tumbled by more than 5% from the record highs achieved just the day before. In Europe, markets in the United Kingdom, France, and Germany also registered slight losses on Wednesday morning, reflecting the pervasive unease. These market retreats coincide with cautionary statements from the chief executives of major financial institutions. Both Morgan Stanley and Goldman Sachs have issued warnings about the potential for a market correction. Their sentiments echo those of Jamie Dimon, the head of JP Morgan Chase, the largest bank in the United States, who had previously expressed concerns in October about a possible market crash within the next 6 months to 2 years. Jim Reed, an analyst at Deutsche Bank, observed a growing chorus discussing whether we might be on the verge of an equity correction, highlighting a clear shift towards risk aversion in the market over the preceding 24 hours. He attributed this to mounting worries about the elevated valuations of technology stocks impacting investor sentiment. Other market observers have also raised pertinent questions regarding the current investment landscape for AI companies. They point out that the overwhelming majority of investment in AI initiatives has been directed towards a select few tech giants, with OpenAI and Nvidia being prime examples. Furthermore, there is a growing concern that the returns on these substantial investments have thus far been minimal. In parallel with the equity market turbulence, the price of Bitcoin experienced a brief dip below $100,000 for the first time since June. This occurred as investors began to withdraw funds from perceived riskier assets, including cryptocurrencies. Amid growing uncertainty about the broader economic outlook, Bitcoin had reached a record price exceeding $126,000 in early October. But the cryptocurrency subsequently fell by 3.7% during that month, marking its worst monthly performance in a decade, according to data from CoinMarketCap, underscoring a pervasive sense of caution gripping financial markets worldwide.